Bitcoin is back in the headlines. And if you're feeling that little bit of should I, shouldn't I, well, you're going to want to stick around. Today, we are breaking down a way simpler method to get into the crypto world. So let's just dive right in. It feels like everyone is talking about crypto again, right? You see the prices climbing, and that fear of missing out, the FOMO, is so real. But for most of us, the biggest question has always been, how do you actually get involved without getting totally overwhelmed by the complexity or, taking on some massive, scary risks? So while all that speculation is definitely heating up, something huge, something fundamental has changed this time around. There is now a new and much more familiar path for everyday investors to get access to these markets. And honestly, it changes the entire game.
I mean, this slide really lays it all out. The old way meant you had to figure out these weird crypto exchanges, set up digital wallets. You basically had to become your own high-tech bank. The new way, it all happens right inside the brokerage account you probably already have, using fully regulated products called ETFs. So much simpler.
And let's be real, the old way felt a lot like the Wild West. Hacks and scams were, and still are, everywhere. To be really secure, you had to store your crypto on something like a special flash drive. But here's the terrifying part. If you lost that drive, or, heaven forbid, forgot the password, your investment could just, poof, vanish forever, with almost no way to get it back. So what's the solution to all that chaos and risk? Well, it's this thing called an exchange-traded fund, or ETF for short. It's a financial tool that's designed to take all of that complexity right off your plate. Think about it like this. Most people who invest in gold don't actually have gold bars sitting in a safe in their basement, right? Of course not. They buy a gold ETF. This is the exact same idea. You get all the exposure to Bitcoin's price movements without any of the headaches of actually securing it yourself. And this new approach has some seriously great benefits. For one, these ETFs are regulated, so buying and selling is a breeze. Two, your taxes get way easier. It's just a single 1099 form from your broker. And maybe most importantly, the security is handled by massive professional institutions, not you. Now, of course, it's not perfect. There are always trade-offs. You'll have to pay a small annual management fee, which is called an expense ratio. You also can't trade 24/7 like you can on a crypto exchange. You're stuck with normal stock market hours. It really is that classic choice between convenience and total control. Okay, so now that we get the what and the why, let's look at how this plays out in the real world. We're going to check out 3 different flavors of Bitcoin ETFs that you can find right in your brokerage account. First up, we've got IBIT, which is the iShares Bitcoin Trust. You can think of this one as the big, popular, mainstream choice. It's built for investors who just want a cheap and easy way to track the price of Bitcoin directly. So let's look at the key details. The ticker is IBIT. Its main feature is what's called high liquidity, which is just a fancy way of saying it's super easy to buy and sell lots of it at a fair price. And check out that expense ratio, just 0.25%. That makes it one of the absolute cheapest options you can find. And just to give you a sense of its sheer size, IBIT has almost $94 billion in assets under its belt. That massive scale is a big reason why it's so efficient and easy to trade, just like we were talking about. All right, next up is FBTC, the Fidelity Wise Origin Bitcoin Fund. Now, this one is a lot like IBIT, but it's got one key difference that makes it super appealing for a certain group of people. The cost is exactly the same, 0.25%. The real selling point here is for folks who are already Fidelity customers. With FTBC, your Bitcoin exposure is held and secured by Fidelity's own in-house digital asset team. It's all under one roof. Super convenient. Okay, time to switch gears completely. Our third option, BITQ, is the Bitwise Crypto Industry Innovators ETF. And this is different. Instead of buying Bitcoin itself, this fund buys stock in the companies that are building the crypto industry. It's what they call a picks and shovels strategy. So with BIQ, you're buying a whole collection of stocks. And you'll notice that expense ratio is quite a bit higher at 0.85%. And that's really the price you pay for having a manager who is actively picking and choosing all these different companies for you. This chart shows you exactly what's under the hood. You can see BitQ doesn't actually hold any Bitcoin at all. Instead, it owns shares in 38 different companies, everything from crypto exchanges to the big Bitcoin miners. So with this, you aren't just betting on the price of one coin, you're betting on the growth of the whole ecosystem. So, when you look at these three very different options, it all really boils down to one big question. What's your strategy?
At the end of the day, you've really got two main paths you can take. You can go with something like IBT or FBTC, where your investment is tied directly to the price of Bitcoin, up or down. Or you can go with BITQ and invest in the overall success and growth of the crypto industry itself. They're two totally different ways to look at the market.
And so that really leaves us with the final question, the one for you to think about. When you consider adding crypto to your portfolio, are you looking for a pure play on Bitcoin's price? Or would you rather bet on the companies that are building the infrastructure for the future of this industry? The beautiful part is, now you know the difference and the choice is yours.